So we keep hearing that we're waiting for this big pivot, when actually what we're waiting for is for people to stop waiting for the pivot, because that's when things begin to take off. And if we get a little bit closer look on this, we're actually waiting for just before people stop waiting for the pivot, because that's really the only way to get those trucks backed up. So if we're trying to time this whole thing, we're going to need a little luck. So I think we can safely say now that we probably didn't already hit the bottom for gold. Last week people were suggesting that we had, but this week the dollar is back up, the markets are back down, and gold is creeping back down as well. We didn't get any kind of pivot. We also didn't get any real reason to think that the pivot was coming soon. And last week, it turned out to be a fake rally, kind of a little head fake for the week, a little bit of hope. But that hope was based on isolated events. The Bank of England, they started buying gilt bonds again, and we had a strange report from the United Nations. Now, what's going on in England is not insignificant, but it didn't signal any policy change from any other central banks. Neither did the plea from the United Nations. I do get it, though. The idea of a pivot, it seems really exciting. I think people just jumped the gun. I didn't change any gears personally. The idea of a turnaround, that was pretty premature. I mean, we still have like 200 days left if you go for my big prediction. And I hope that everybody realizes that more or less I'm just kidding there. But I didn't run out and start buying like we had hit the bottom. I'm still waiting for a drop, but I haven't stopped buying entirely. And that's the point of the video. Give me a minute to explain that part, but the quick version is that I'm not running out going crazy buying everything I can find. So earlier when I mentioned the rally on gold and silver prices, how that was maybe a fake rally, a head fake, a masquerade rally, what has not been fake is the spike on premiums. Inventory availability, or at least low price inventory availability, has been a real issue as well. I'm seeing it locally and it's been happening for a few weeks already. And here's the problem. Normally, this is the kind of thing that self-corrects, or at least partially self-corrects. What happened here is that, first of all, the premium spiked because the prices were falling. And what that means is that the inventory that the local shops had was picked up at higher prices than they were able to sell it for, so they had to increase their premiums to cover that loss. And then very quickly, the spot price spiked. So demand spiked, everybody ran in to buy, and those premiums just never came down. Local shops were cleaned out. It's just been a really tough time to find deals. Now, if we're being realistic, the online dealers have plenty of inventory. JM Bullion is not going to run out of bullion, but we'll come back to that. And locally is where you see the issue, and I saw it again firsthand last week when I stopped into a local shop that I haven't used before. They had no real inventory, no gold at least. They had lots of, I guess what you would call collectible silver, slabbed silver. That was everywhere. Now that was at the beginning of the week, and they said that they were expecting a big run up in the price of precious metals through the end of the year. And then, of course, the following day, the prices all fell. I had just met that dealer. I didn't know him before. So from my experience, his batting average, not very good, but he did have a good sales pitch, and maybe that's why he didn't have any inventory. He was a good salesman. Now, I'm suspicious about overly bullish price predictions. Anyone saying that the price is only going to run up through the end of the year, I'm probably not going to believe it. I agree that it makes sense to keep buying, though, but I didn't think then that we were on the verge of that run up on gold. Now, suspicion confirmed there because gold dropped the next day, but I still don't think we're only going to see a run up. I think that we're going to see ups. I think that we're going to see downs. I do think, though, that 3 years from now, it probably won't matter much. I think that gold will be higher then than it is now. And the reason that I'm spending time on this, rather than just leading with that idea, that guess that gold will only be higher in a few years, is that I don't want to give the impression that I think we should all run out and buy as much gold as we can right now on the expectation that it is only going to go up. Now, I mentioned that I expect to see a drop in the near future. Couldn't tell you when, unless you believe that video where I said 211 days. I think that was about 11 days ago. There was some sarcasm in that. But the part that's really easy to forget about is that the markets tend to price in moves before the moves actually happen. So if we're waiting for a Fed pivot, my guess is that once it's clear that we have the pivot coming, it will be too late from a price perspective at least. The pivot will already be priced in, and I think that that part is really important to consider. And that's why I think that it's a good idea just to keep buying at a controlled clip rather than holding for that magic pivot. I think that that will be very hard to time. So let's come back to inventory and premiums, because those two things, we need to look at what they're going to do when we see that pivot, because the minute that the spot price of gold and silver begin to head up, buyers pour in. They're going to do it again. They're going to send it further up because people love to buy on the way up. And that's the kind of catalyst that will also spike premiums as if they weren't already bad. And then to a certain extent, it will make it even harder to find the types of gold and silver that you're looking for. So again, you're not going to have trouble finding gold and silver. The bullion dealers will always have it, but those deals that you find at local dealers, they will be gone very quickly. The sales at the online dealers, those will be gone as well. So it will feel like there's an inventory crunch. And that pushes you further into that gross price territory just to find what you want. You might even see products go into pre-order as mints try to keep up. We've seen that already. So if you're looking forward to the pivot, ideally you're ahead of it. You're ahead of the traders pricing it in, and that means ahead of the spot price jumping up. You're ahead of the premium jump, and you're ahead of the inventory issues that get rid of the last of the reasonable deals. So you won't be timing the pivot. You'll be timing people's anticipation of the pivot, and that makes it even more difficult. So you kind of have to slow down and look at what's happening right now. We're kind of in a lucky place. We have the luxury of being picky on what we're buying at a time when spot price is being pushed down. And if you were to sell right now, which I don't recommend, the high premiums that we're seeing also mean that it's a seller's market. So it's pretty hard to lose, even if we did see a short-term drop in spot price. The reason that I like the dollar cost average model, even though it's kind of boring, is that you can spread out the price risk. If price does drop, you can still get in on some of it. If it takes off, you already got in on some of it. So waiting or trying to time the whole thing, that's really the only risky option to me. Maybe assuming that we've already hit the bottom, that's another risky option. It's kind of the same thing though, because we're still betting on the bottom. And that idea that traders are pricing in their guess at coming events before the events actually play out, that makes the whole thing a lot harder, and we're going to see a good example of that tomorrow when CPI numbers hit. Traders will start pricing in what they think the Fed will do, and then we'll probably see a quick shakeup if they guessed wrong when the Fed actually does announce the hike. And this is why it's so difficult to predict where the spot price of gold and silver are going, because you aren't predicting based on solid events. You're predicting on people's interpretations of events that are coming in the future, so you're guessing on somebody's guess. And that's why I'm not getting too excited either way right now. The price movement that we've been seeing lately has really only come on trader speculation that has turned out to be wrong. And I'd rather buy calmly when the price is right. So let's call it good there. Let us know what you're up to. Are you still buying? Are you waiting? Do you think that we've already found the bottom for gold at 1620? Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure to subscribe with notifications turned on if you want to see more on the topic. That's a big one for the channel, of course. And if you're still here, thanks again for watching. I always appreciate your time. Take care.